So again, reminder, copper and silver, recommended don't really try to open charts on them this week. They're going to roll them over and merge the new pricing model, or not pricing, but how they quote it. So just clear your cash with the toolkit on Sunday or Monday, but also Friday after the close. Okay, over here on the scanner, we got the rollover contract specs. And right here, the Nadex information on the scanner, okay, or you can go directly to the link, whatever. You'll see that we have crude oil rolling over Saturday, which is technically Friday after the close. So what do you need to do as a trader to be able to correctly have everything updated for you? You're going to want to go in and go to your NinjaTrader, go to Tools, go to Instrument Manager. Then scroll on down to CL. And you can see right here, if we go back over, you can highlight over this. And should be able to highlight over this. There we go. Gotta get just like the right magical spot. But it'll tell you that it's going to roll over to CL1014 or CLV4, depending upon what thing you're using. So let's just say you're using Ninja. Then CL09-14, just click on that if you have it in your default instrument list already. And then you'll right click and then you'll left click. Okay, now notice I still have CL0914. So if I wanted to have CL1014, I'd right click and then I'd choose CL1014 and then I'd left click. Notice I didn't have to search up here at all to get that. All I gotta do is find it. If I already have it in my default list, it makes it super easy. I'll put 914 back on there because we're still on 914. But you do want to make sure you roll that over. And if you're trading on Nadex, if you're trading on futures, you're also going to want to be rolling things over. If you're a futures trader, as a reminder for rollover lessons, you can always go to either you can open up both instruments on Ninja or in a market analyzer, or you can actually go to the exchange website. So let's say if you're going to cmegroup.com, which is the exchange website for obviously the CME, COMEX, NYMEX, all that stuff, since CME Group owns them all. And go in, look at energy, and scroll on down to crude oil. And then you can just look at volume. And when you look at volume, you'll see where all the volume's at. Okay? And right now, you see all the volume is on September. 253,000 contracts on September. The liquid month, the month you want to be trading as a futures trader, is going to be the high volume month. Okay? You notice October is starting to pick up at 128,000. By the end of the week, it'll be rolling on over. Okay? And we ought to see that number, especially by Monday, we ought to see October exceeding September. So just, like, how do I know which one I should be trading if I'm not trading Nadex? You should be trading the one with the highest volume. And there is, like, rollover schedules and all that stuff. Nadex lines up pretty well with them. They can't roll over on the exact same day, technically, as CME, because they're a different exchange. It's like a trademark thing or something. But they can roll over like the day before, the day after, whatever. So, but usually most rollovers take place on Thursdays on futures. Okay? And some of them are, very scheduled out, like FX and indices and stuff are always on the, the same time. But anyways, that ought to help you on knowing how to roll over on oil. And I think that's the only rollover we got this week. We'll have natural gas next week. We'll have copper and silver the week after that, which will be good because that'll be after all this other weird stuff happens. And we'll be good to go. Okay? But yeah, Darby, my suggestion would just be wait until after to try to figure it all out. We'll figure it out first thing. I'm thinking it'll be as easy as clear cash. It'll probably have some new update for NinjaTrader. Like, as soon as that's done this weekend, they'll probably release it. And then the old and new historical will merge, and you'll just download it. Because they made that message really complicated. So make sure that, if you see a pop-up on Ninja, to pay attention to those. We will be having some new releases coming up. So spike, striker, deviations, things like that. So as those releases come out, we got some cool little improvements we're working on those. Whenever you see it pop up on Ninja, that's when you know it's live and ready to go. So just make sure to read that, and if it links to something, read the details on it, because basically it'll save you from asking us because we want to obviously serve you as best as we can. But if we get the exact same questions from 400 people, then that of course takes a lot of time to answer all 400 people with the exact same answers. And we don't mind the questions. It's just we want to try to knock out the questions as fast as we can. That's why we make the messages. So make sure you spend just a couple minutes reading them. If you have questions, please ask us, because that means we haven't answered them thoroughly. We want to make sure we do that. But just make sure you do check those messages to help you and help us and help everybody out. So let's see here. We got news. I want to make sure a lot of people they sort of forget about this because it's all the way on the right side of the page. Okay, we got the news trading plan right here. So news trading plan. Click on that. We go through. We talk about all the different news that's happening. And the different releases. I talk about the expectations. I talk about the announcements. And so like right here today, the 14th, we have the unemployment claims report coming out. We have the US PPI. We got earnings release. So we got Walmart coming out on the Dow. That's going to be released today. So that was released today. And so you just want to really make sure, came out at 8:10. Be aware of these things because they'll impact the market in the morning. And let's see, Paul may have had a question. Let me check his question on here. And let's see, what was that on? Okay. Okay, so we got that one knocked out. And I'm knocking out all the questions. But make sure that you are paying attention to the news release plan. Even if you're not trading the news yet. Okay? One, just to start becoming familiar with the news. As a trader, this should be one of your first things you do every morning. See what news is coming out. See what the expectations are. Okay? For instance, I put on here U.S. unemployment claims. We're looking for an iron condor on the euro dollar between 8 and 10 a.m. for a minimum profit of $25, right? So let's go look at it real quick because I want to show you some of the things that people miss on this news plan. It tells you a lot more than often people think it does, okay? And maybe you're like, I don't trade in ADEX. It doesn't matter, okay? You still want to pay attention to the news. So whether or not you're trying to profit directly from the news or just use it to be aware of what's coming out so you're not surprised by something. Let's see here. Come on. So yeah, there's the message right there for the Thursday morning webinars. So we'll be covering all those. And then it's like right up here. So let's go in and let's look between 8 o'clock and 10. What was our biggest move? We actually had a little bigger move than normal. We had 35 pips on that. Where did it settle at? Settled at about 30. Okay? So that was actually a little bigger move. We expected it to be a 25 pip move. It's usually a very flat move. It was about 5. It moved to. I'm not surprised when it moves further than that. I'm surprised when it expires further than 25 pips. But what that means is don't expect to come in and get some monster run on the euro dollar. Don't think you're going to get some 50, 80 pip move on the euro dollar. Okay? Because that doesn't move that far that often when this news report comes out. And let's see, what else do we have? We have the US PPI. That may have overridden it if it was larger. So, because we had 2 news announcements at once. No, that was also a flat one. So, yeah, definitely, we just didn't expect it to move that far. But, and that's okay. It's like a $5 loss on it. But what it would have hurt you on is, what if you got a buy signal on the euro dollar when the market's moving up, and it's up like 25, 30 pips? Do you really want to add on to that trade? This is where I want you to really start interacting here. Would it be a good idea if we're saying that the euro dollar usually doesn't move more than about 25 pips on this news announcement. Would it be a good idea to add on to a euro dollar long trade at that point? What do you think? Exactly. So no. So we got, Raphael, Juan, Kelly, Jim, exactly. So no, not at all. So this is where this news thing starts coming into play, okay? It's the style part of trading. It's not style like gut style, like I feel like this is going to happen. It's reading the charts, the statistics, the seasonality, okay? And the more of those little things you can be aware of, the better off you're going to be as a trader. Now let's check this out. So not only did we have that expectation that it wasn't going to move very far, okay? Like we're thinking, hey, it's going to move 20, 25 pips. Well, what if it does like sort of expand? It goes up here and hits like 30, right? We said 35 pips. And you get a spike striker. Okay? Normally, I'm not a big fan of them, but we got a 15-minute spike striker right here. So 5, 10, 15, it breaks the low. Do you think that might be a good signal if it already went the expected movement, not only on the expected, but on the statistically based expected movement on the news, and then we get a spike striker saying, hey, the market's gonna reverse? Would that maybe be a really solid short signal that you could be taking right over here? So for me, yeah, that's one that I'm like really into. I'm probably, I'm not going to encourage this, but I'm probably going to do a little bit more. Okay, contracts on that signal. I love doing spike strikers off of news. I did one a couple weeks ago. We did a whole webinar just on doing them on oil, right? So, yeah, that's definitely what I'm going to be all about. That's one I'm even going to be likely to do an out of the money on. Because look at this thing. I mean, we're perfect right here. We've moved the expectation. We've actually pushed a little past the expectation on the news, okay? And so think about this. Every time there's a news report, you can really focus on spike strikers on instruments like that because you're going to get volume spikes when things come out a lot of times. So news report comes out, pushes up, starts pulling back. 5-minute doesn't trigger, and it's at end of hour. I'm not a big fan on those. I mean, the trade would have worked out great, but not usually a big fan. But we got a 15-minute one, which doesn't technically fire off till, 1, 2, 3 spikes, 1, 2, 3 bars after. So right here, I'm probably going to go, you know what? We're at the middle. We haven't moved up in the range at all. We have all this movement to go down because we're right here. This is an advanced application of Spike Striker, but the out of the monies are more advanced. If I'm going to choose an out of the money, I want the strike close. I ideally want it cheap. And I want to see that there's movement left in the expected move to get it. I'm less likely to go for like a P2 where the market runs all the way up and I think it's going to come way back down and out of the money. But if I get one like in the middle of the range and we still have expected movement left after a big move up on volume, we're actually not just volume, but a big move up on news where we're expecting the thing to die back off anyway, then yeah, I'm going to go for that expected move. And so you can go in here and you can be targeting a really close, strike. I mean, 5, 10 ticks away on an out of the money and have a nice profit. As you can see, it's moved right on down to the expected move down right there, sort of oscillating. We only got, about 9 minutes left in the hour, but we're basically at the expected move. Now, at this point, would I probably want to be taking profits on my out of the money contract? Would this be a good point to take them if I haven't taken them already? Now, the market could drop, right? You can make a fortune. But is this the right place to take, based on the chart, based on the expected move? Okay? Yeah, it's a solid point, especially now you're seeing that tick up. Your heart's like, I don't want to get my profit back, all that fun stuff. We're at the expected move. And look at volume. Look at volume. What's happening here? I mean, on the 5, on the 10, on the 15, okay? And where did that big volume move happen? It all happened right there, right to the expected move. See that? See how it ran to the expected move? And then it popped up off of it? And it started moving on back down? Okay? That's where the big volume occurred, mainly right here. So, looking at that, Might go, not only am I going to target the expected range, but I'm going to get out when it hits the expected range. Now, some of y'all like to live a little bit more on the wild side. I just know that's how you are, so I'm going to try to help you understand how to take advantage of that. So what you're going to do is, one is you're going to take at least part of your profits. Let's say you're doing 20 or 50 contracts or whatever, okay? Maybe you're doing 2. But you're going to take part of your profits the second it hits the bottom of this expected range. So you got a stop trigger to take profit when it hits that price level, okay? The other half, you could then trail down, like say with the high of the most recent bar, which means you'd give it all back probably right here. You'd actually be in loss at this point. But it comes on back down, and maybe this thing moves on down. Maybe you finish in the money, and you end up clearing out a whole lot of cash. But you've covered all your risk with the other half. The other half has to cover all your risk, because if it takes 2/3, to cover all your risk, whatever it takes, you want to take all that. But just looking at the normal expectancy, and you really want to start trading towards the averages, okay? Not towards the unique one-off events. Yes, the market will go crazy haywire, and you can make a fortune occasionally when it just does something weird. But you can cost yourself a whole lot more money trying to go for those big moves on the rare occurrences that they actually do happen. Because you'll give up so much profit again and again and again that when you do get it, you'll feel like a trading god or something, right? But the reality is, but you lost on 4 other trades trying to get that additional money. And there's a lot of money to be made in base hits and trading, okay? So, I just, some of the things I want to stress to you. Now, you don't have to be a Nadex trader to take advantage of this. I mean, the market ran up. It moved its 20, 25, 30 pips. You got a spike striker. That's a short signal, okay? You got a sort of a double short signal going on. The market's starting to pull back down. You got to move down to the expected move. You could go in and scalp. It's not huge, but 10 ticks or so with a tight stop. Like right here, you're going short here. You could put a stop loss like right above the high of this. So, you're talking a pretty small, move right there. About a 10 tick stop for a 10 tick take profit. And you're going in to target and take profit right when it hits the bottom of the expected range. And you sold when it broke the low of this bar right here. So that was your confirmation on Spike Striker. And you can even do that as a underlying market trader. You're trading spot FX, you're trading CFDs, you're trading futures. Now, that's if you're going for an out-of-the-money style play. But usually you don't get the oscillations back up. So they work really well for you. But, man, especially when you get good at those out-of-the-monies, and that's really an underlying market play, because you're like, man, I got the movement left in the hour. It hasn't exhausted its range. We moved a little bit further than we actually expected, so we really should expect a pullback. And, we can look at where did that pullback go to. Well, let's go over here. Let's look at this. Right here, this is off the initial release. Let's see, at 8:30, here's where the market was right before the announcement came out. Okay? Here's where that first initial release, about 5 minutes into it, it went right to this price level that we're at right now. Okay? So, that was our sell point right here. But look, that's like, it went right back to where the first pop off of it was. We can go and we can start looking at magnet levels on pricing. I mean, this isn't like full-size onslaught magnets, but these are just some little volume tips for you today. Okay? And Jack's right. You make a lot of money with small moves. I make a lot of money with small moves, by the way, people. People always... Yeah, I have $5,000 trades and all that fun stuff. But as far as day in, day out, I'm probably bringing in $500 to $2,500 a day on small moves. Okay? So, I think yesterday pulled in, I don't know, $2,500 or $3,000 or something like that. And most of that was small moves. But anyway, so right over here, market pops on up. And and then it pulls down, goes there. Okay, we got that. Now we get another pop up. It pulls back. It goes right to that level again. Look, when it breaks that level, we get a big volume pop. Pops right through it. Becomes a volume spike. Pulls on down. So we break that through that level. No problem. We come on down. Here's the other big volume spike. Almost a magnet type pricing level. Goes right back down to it. But look, nothing's happening. We're going right into the end of the expiration. We're going right to the expected move. So this is where the expected moves come in. This is a style to reading the markets. Now you cannot play pure style. You will get eaten alive. Okay? Notice I'm not telling you to play pure style. What I'm telling you is go in and look at the expectations. The market should move about 20, 25 pips. Market moved 30, 35 pips. That's bigger than normal. Then we get a spike striker. That's a system. Okay? A system to go in and go short. It's telling me to go short after we've moved the expected move. I have a defined entry. Now I could hop in and just go short. I could get eaten alive also, right? So, but style pops up. I'm like, all right, so style says, yeah, I want to go short. But the system also tells me to go short. I get that short entry. I can either do an in the money strike. I can go short FX, whatever. Where am I targeting? What is my profit target? Well, I can, of course, just take a $20 profit or whatever. Or I could target, and if I could target it, then I could actually do an out of the money because I haven't moved the expected range, so it makes sense why I might want to choose an out of the money on this one. Or I might go in and double binary it. So double binary means I sell it out of the money and I sell it in the money to pay for it, or I may just sell the euro dollar, okay? Or I may sell a euro dollar spread. And so it's moving on down. I take my profit right here because that's how far I expect it to move for this hour. Okay? And that's pretty much it. But that's putting together a systematic plan of entry, stop loss, take profit, with style reading where's a really ideal take profit, where's maybe an ideal strike, style giving me more confidence, volume giving me more confidence on the play. Okay? So hopefully that helps y'all out, but it's just one of those opportune live moments as we're going over the news plan. Now we're in a new hour. Euro dollar could easily pull on back down. So pre-news is probably going to pull back down to that level right there, 33.73. So making for an easy, small play. So now this brings up another major topic that we will go into in a little bit. But let's see here. Oh, also on the news play, we got holidays and stuff coming up in some of the countries. Just make sure you watch that news trading plan. So the other topic this brings up is the new strikes on Nadex. So I want to go into that with you, but we'll do that in a separate video. Okay? All right, we'll wrap this one up.